Smart 24, driving business.
Welcome back from that short break. We are still continuing with the stock exchange market, the insight of it, and we are talking about Nairobi. We're still talking about the top board and then the growing board.
Yes.
Yeah, we on the discussion of Stanbic and the Kenyan markets.
Yeah, absolutely. I just want to remind our viewers that the show is proudly brought to you by Altex East Africa. And under Altex East Africa, we have treasury bonds. And the treasury bonds are transferable debts of government that government issues through the central banks. The Central Bank of Uganda, the Central Bank of Kenya, and the Central Bank of Tanzania. Now, with Altex East Africa, we are saying you can simply dial *292# to get to access these bonds and transfer money off your mobile wallet onto the exchange and carry out your trading. This is why we are saying you can do something absolutely new and wonderful with Altex East Africa. Altex is also regulated by the Capital Markets Authority of Uganda. Markets open at 8 a.m. and close at 3 p.m. East African Standard Time. With Altex East Africa, you can do something new.
Okay, keeping up with our conversation, we're still concluding the market of Nairobi, and we move into the collective investment scheme to elaborate more about the entire performance. Yes, so and continuing with the market of Nairobi, we had Safaricom also and Cooperative Bank of Kenya and then Kengen. Those are also among the traders.
Biggest
and for
ones, yeah.
Cooperative Bank of Kenya has 1.4 million. That is a big amount. How is it a big performer like that? It's actually a cooperative bank,
Yes.
but still it's at 1.4.
Absolutely. Now, when you talk about Cooperative Bank of Kenya, it's a Kenyan-based financial institution that offers banking and banking-related services.
Yes.
The company currently is primarily involved in corporate and retail banking at the investment and asset management level, where they do asset management, like here in Uganda we have asset managers such as Sanlam and so on, but they do also offer the banking services. So the company currently has at least a market capitalization of 73.9 billion Kenyan shillings, currently representing at least 3.84% of the Nairobi Securities Exchange. Cooperative Bank of Kenya is a stock that's currently also the 6th most traded on stock.
Okay, that is Africa-wide?
In Nairobi, because we've had Nairobi Securities Exchange at least have Safaricom at the helm of the top movers, but Cooperative Bank of Kenya is one of those one-off big traders for the day. It's in the league of companies like ABSA, companies like when you look at Kenya Power and Lighting Company, companies like Safaricom, which are daily traders. In Kenya, we have those stocks where we don't even have to ask. They will trade. They will trade. And that's the culture that the Nairobi Securities Exchange has built over time. Okay. Like I mentioned, 1954 is a very long time, because I have to say, in the first place in East Africa, we didn't have these stock exchanges all over the place. We had one stock exchange, and that was Nairobi. And that's where all companies, whether in Uganda, whether in Tanzania, whether in Kenya, were listed. It was started by the colonialists, where they wanted companies that were, getting to have very huge investments, at least have a listing on the public stock exchange. So they had a single stock exchange, and that was Nairobi. So these are some of the oldest listings. These are some of the stocks that have traded longest and have built a culture of trading. Matha, when I talk about a culture of trading,
it has gone and on. It's keeping going.
Exactly. It's like breakfast. People know, I know today I'll go and buy something at Safaricom. The way you, for example, save 10,000 shillings a day. Let's say you put that aside and you have a PG bank, and I know, Matha, you must be having a PG bank. Absolutely. But we want to get rid of PG banks. We want you to get that 10,000 shillings and to know this is for Safaricom. Okay? Every single day, I'm going to save at least 10,000 shillings for Safaricom, maybe 2,000 shillings for Cooperative Bank of Kenya, and I'm going to go and buy these shares. And trust me, you might not see it, But in the next 10 years, you will realize how much your money has accumulated and gained value through this investment. Especially, it must be prudent investment. Of course, you don't just throw money here and there and you don't track, you don't do research. No, you make research. You make projections. You go to your financial advisor. You ask them about these companies. You ask if this is a good portfolio to have. All right? And this is exactly what the Kenyans are doing. And that's why we're having stocks like Cooperative Bank of Kenya having such huge volumes, because they are people who know it's a daily bread. It's a piece of daily bread that they have to consume every single day. They have to trade, they have to buy shares, and we are lacking that culture here in Uganda. Yeah.
But then I think for the Cooperative Bank of Kenya, there's a way they have built their thing. But I think with time we shall also catch up, and you know that every morning I have to trade with Stanbic Bank, for example, with MTN. But it takes time. Though it's really a big achievement because their share number is really high. Yeah. How about the KenGen?
KenGen is a smaller company, and KenGen is an electrical generating company. Just like the way we have Uganda Electricity Generation Company, that is UEGCL. So this is like Kenya's electricity generating company. It's currently involved in electric power generating in East Africa, and is engaged in the business of developing, managing, and also operating power generating plants all over Kenya. Power generating plants are currently very something trending in Kenya, because we've for a very long time been supplying a lot of electricity to Kenya, and I think they want to cut down on that. So companies that come up like KenGen, definitely you expect a lot of attention on them, because they are contributing to the utility or services industry. Because it depends on also being listed on the exchange, and how much activity you have depends on what amount of value you're adding to society. Now, for a power generating company like KenGen, definitely today or tomorrow they'll make a profit. And investors know when they do make a profit, the dividend is on the way. Remember, Matha, when we talk about stocks, the only two ways we can gain from stocks is through capital gain or through dividends. And capital gain, we are talking about an appreciation in price, like the way you see KenGen, they didn't have any addition, but other companies that had additions to their stock prices. It means the moment I sell next time, I'm selling at a higher price and I'm making a profit. That is just one way. But also the dividend part counts a lot. Dividend is a share of the profit that is given back to the shareholder. Okay? So if a company is like a power generating company, people anticipate.
They know anytime
they're going to get money and they're going to make a profit. So that's why I would say companies like KenGen have also been very active on the Nairobi market.
Yes. Well, as we are continuing with the different markets, we have also to assess the Capital Markets Authority quarterly report. And in this, we're going to start with the collective investment schemes, where there has been an increment in this, and it has grown by 12.1%. You know, this report is giving us the various achievements in the Capital Markets Authority, that is of Uganda. So, Anthony, the collective investment scheme, elaborations in terms of what is involved in the collective investment schemes.
Wonderful question. I think this is one of the things that is going to drive the Capital Markets Authority, the capital markets of Uganda to the next level. Personally, I'm an investor in the collective investment scheme. I love the collective investment scheme. I love the ease it brings to trading. I love the ease it brings to the shareholders. I love the fact that it's less risky, actually almost 0% risk.
It's more understandable than the others. And like you mentioned in the quarterly report from the Capital Markets Authority of Uganda, according to the data from the fourth quarter, because now we're in the first quarter of 2023 and the data is not yet out. So we're just going to get to look at the figures from the fourth quarter of 2022, just last year. September to December.
Yes. Collective investment scheme had a total of 1.6 trillion Ugandan shillings. And this was a worth of assets under management at the end of the review period, representing a growth of at least 12.1%. Now, that is from the 1.4 trillion. That was in the third quarter. But when you look subsequently in the second quarter of 2022, we had 1.3 trillion.
Yeah.
And then in the first quarter of 2022, we had 1.14 trillion.
Yeah.
That trend shows a growing trend.
It keeps on growing.
It keeps growing, and it's growing by bigger percentages, 12.1%, 16%. Who knows, in this month, in this first quarter of 2023, we could be...
It may also grow to another bigger number.
Yes.
So indicating that the collective investment schemes are more liked or more understood than the others.
Thank you, more understood. I would buy the more understood because people don't have time or haven't given themselves to the interest of getting to make research.
Yes.
Especially because capital markets investments requires a lot of reading, requires a lot of reviewing reports and understanding them. People don't have that time. People have so many things to do, and I don't blame them. That's why the collective investment scheme is a very dynamic scheme. It gives you value in the long run, but you don't need to understand everything.
Yes.
Let me tell you what a collective investment scheme gives you. So you have people like Matha, you have people like Anthony. They have money. They have been saving this money in the banks and probably in fixed deposit accounts where they expect that money sometimes to come out either less or more depending on where they have put that money.
Yeah. Now,
collective investment schemes give you a collective investment scheme. I don't know, it's a very self-explanatory.
It is all together,
yes, they bring together
investment.
Exactly. So they bring together money, Matha's 10,000 and Anthony's 1 million.
And they make something better out of it.
They make something bigger out of it and then invest at once.
Yeah.
Let's give you an example. For example, if you had a treasury bond of 100 million.
Yes.
I don't think, Matha, right now you could afford that. I don't know. Maybe there might be information I don't
Honestly,
have.
It's not even a bond. It's you know that you said a treasury bond, right?
Yes.
It's actually longer than the other one. So I can't afford the but
definitely.
Yes.
So, but they can get that 10,000. They add it to Anthony's 1 million. They add it to John's maybe 20,000, and we make at least a sum of 50 million.
Yeah.
Out of all this, we invest this money at once. Whenever you invest by a bigger margin, you're going to gain profit by a bigger margin. That means that the return is going to be accounted for as per 50 million, not as per 10,000, not as per 20,000, not as per 1 million.
Okay.
So the return you're getting back is not the value you would if you invested alone as Matha with 10,000.
You'd get the value of
get the value of 50 million.
Okay.
So they get that value and then split it back into the investors' pockets by measure of how much each invested. Of course, when you invested 1 million and 10,000, you won't get the same amount of money, but it will be bigger than what you would get
if you had done it alone.
Yeah.
So clearly, the collective investment schemes bring it together, and they make sure you get the money back together, which is that is why there is a lot of improvement. Month by month, people go into it. So on a scale of the East African community, that is the other countries, is it also the same in other countries that also in Kenya, people are doing more of this than the other things?
Very, very well. You've put it very right. People, not only in Uganda, but in East Africa, are waking up to the collective investment scheme. Sometimes they're called unit trusts. Yeah?
Yes.
And one of the other reasons why is that they are safe.
Oh.
And they provide liquidity. Let me tell you, Matha, investors are looking for liquidity. There's no investor out there who is looking for a place where they're going to invest and have to wait for a year to get back their money.
But it's a long time.
It's a very long
10
time.
years to get back their money.
What collective investment schemes do, this is very interesting. You invest, for example, if I want to make a deposit today, that deposit will come on my account in 3 days. That's 3 business days. So Tuesday I make my investment. On Friday I see that money on my account.
Yes.
The next day, that collective investment scheme gives you value. So if it's a 10% increase or 10% rating, you're going to get value starting daily. They're going to break down that 10% annual increase or annual rate into a daily rate. And then you're going to get that percentage on your account every single day. That is one. You're gaining value daily.
Like you see that progress every day.
Every day you're seeing your money growing. Much as by a small fraction, but it's growing.
But at least you know where your money is going.
You know my money is growing. That's one. Second, if I get an emergency, and I want to use this money, I can withdraw this money. I can get this money off my account in 3 business days. Remember, to put it on the account, it takes 3 business days. To get it off, I need 3 days, and I can get it back, even with the value with which it has been able to accrue.
So the more the days of maturity, the more you get back the money. That is really interesting.
And they reinvest the interest. So if I told you invested 200,000 and on a certain day you have 200,000, 5,000,
yes,
they are going to reinvest 200,000, 5,000. So you're going to even get more of the interest. You see, it's the collective investment scheme.
And it's really easy to understand.
Yes.
You get to know how much you're gaining, you're putting in, and how much you're going to invest in.
Absolutely.
So how about the assets under management? It also has a growth by 66.6%. That is still in the quarterly review of the Capital Markets Authority. This is also the numbers are increasing. The users are gaining more and more, and it shows that people are really understanding this, and they would like to actually gain more money from it.
Yeah.
So the assets under management thing.
Yeah. So we've had a growth in the number of fund managers.
Yes.
Fund managers. When you look at the list of fund managers currently, SBG Securities is one of the latest to actually come on board as a new fund manager for the collective investment scheme. And this means we still have a contribution to the assets under management. When we talk about assets under management, we're talking about what the collective investment schemes are being invested in. So you get your money, me, I get my money. I don't choose. That's the thing with the collective investment schemes that probably puts off some people. You're not in direct control of your money. So it's the fund manager who is going to invest that money on your behalf. And that's why it's called a fund manager.
That the fund manager is clearly not to distract someone or what, but at least to lead you. That's in case you get into a wrong funding or something. Though to some people, you're doing something for the first time and then they tell you, you're going to manage your own thing. It's kind of disturbing, but it's a good. And
I would say it's not just good, it's better than you. Let's say you're a lawyer, you're a doctor, you are maybe a market woman. It doesn't matter what you're doing. You're not going to get time to make the research that this fund manager is actually going to get. Maybe you could ask me, what do the fund managers get?
Yes.
There's a 2% of the interest. Okay. The fund manager feeds off the interest. So by all means, fund managers are going to get an interest on your money because that's where their salary is.
They're like the middleman in this thing.
Thank you. And they only eat after you've eaten. You see, that's an African proverb probably that I didn't mention in the show. But they will only eat
after you have eaten.
And that means that they will feed off your interest. So they're going to do all they can to get an interest on your money. And this is why we are seeing so many fund managers coming up, like SBG, like Zeno, and the like.
So, okay, now moving to the fund managers. We've had UAP, we have ICEA, we have Sanlam, and you've talked of Zeno and the others. So these fund managers also they have had those. There's also that good performance they are having. Like there's that change. For example, the biggest is Sanlam Investment. No, the biggest it's Sanlam Investment East Africa. This one has approximately 59.6%. That implies that more people are getting to talk to them and understanding. But these new bodies coming into the entire under management thing, how would they conduct and be at least better or improve? For example,
very wonderful question. When it comes to the fund managers, they need to embrace technology. Sanlam, Zeno, SBG, they have embraced technology. That's why you see their numbers are growing from the third quarter to the fourth quarter, according to the bulletin. It shows that Sanlam had 31.4 trillion.
Now it has
billion,
50.1.
And now it has 50.1 billion at the close of the year. And that's a 59% growth. There's a reason for that. They have got to reach out to the customers, their clients. They give them daily feedback.
Okay.
They give them reports of how their money is being invested. They give them, and they don't have to move to their offices. I don't have to go to Sanlam to get to follow through, to get to fill forms. No, I can do everything online. And I would also appreciate Zeno technology. Zeno Investment Technologies has also done a wonderful job in the line of technology, transferring money easily from mobile phones to the exchange, rather to the fund manager. It's very smooth. I no longer need to put it on the account or maybe a bank or something. No, I simply have mobile money and I can transfer off mobile money too.
Anytime.
And if we could have that ease, if we could make life easy through technology, fund managers will see even these numbers grow to crazier numbers very soon.
And relating to that day, being Women's Day, we've had a previous conversation on how women are embracing the fintechs, how people are embracing technology. It's really a big thing for our country, because you realize as the world is evolving, this century is also going to have a bigger number in terms of having more use of the phones. And remember, when I have a phone or any gadget I'm using, I know even if I'm home, even if I'm in field or any other place, I will access. And back to these managers, do you see that there's a common thing about them? They're all insurance companies, ICEA, Sanlam, UAP. Why is it? Because it's insurance, or they have that, insurance, your things are protected, you have that entire ultimatum that you're safe?
You see, insurance business is not easy business.
Never.
Especially in Africa, and people haven't yet embraced. People don't know that, well, my cousin got an accident, why do I need to insure it? They think they first have to, we are not proactive, we are reactive, more reactive naturally. So I think it's a way of innovating that these insurance companies have come up with. They have asked the question, what else can we do?
Yeah.
What else can we do? And remember, they are managing a lot of funds, especially insurance funds that come in every single month, as premium, as so many other things that they are keeping for their clients. And that money, when it lies idle, that means it's going to lose value in the long run, not only for them, but also for the country. Remember, any money that's not invested is money that is losing value. Every time you keep money under your bed, in that piggy bank, and you're not using it to invest, you're losing value. That means that they also want to utilize the funds they have as investment assets, and then they have the return on those investments, and that return can be given back to the investors. It can also help the company grow. So I think that's why you're seeing more of these insurance companies and fund management companies coming up and sprouting in a very fast rate.
Yes, and how about this? The new baby, is it also an insurance company?
No, as SBD is entirely a securities broker.
Yeah.
They do brokerage. They do brokerage on the Uganda Securities Exchange. They do brokerage now on the collective investment scheme, and they have been there for quite some time, and they are very renowned. They are a subsidiary of Stanbic Holdings. That is where we have Stanbic Bank and the like. So they're absolutely good at the game. So I'm really optimistic that they will fulfill the duty.
Because the Western Big Bank is getting into the game. Like it's approaching all sides. It's beating every side of the game, which is really, really impressive. So moving on, we have the treasury bills and bonds, and these are where you have an opportunity to, give government some money. It's interesting to give your government some money, but imagine giving a whole government money. Though it's really, before you do the entire treasury bills and bonds, you have to actually understand the primary and the secondary part. So moving to clearly just an abstract summary of this thing, the treasury bills and the bonds. Which one is longer, which one is shorter, and which one is better?
Treasury bills are shorter term instruments. Treasury bills are 3 months, 6 months, and 12 months. And these are short term, and the interest comes at once. Yeah. Usually the interest is a little bit smaller because they're short term. Treasury bonds, on the other hand, are longer term, starting from 2 years, 3 years, up to 15 years in Uganda. But in Kenya, we go up to over 30 years. Okay. So they have gained traction recently because of their risk-free nature, because they don't involve risk, because we know government will pay.
You're very sure?
You're sure government is going to pay. So that's why they are safer investments, and people are attracted towards them.
Yeah, but then you see what really worries people. For example, for the bonds, for they're a little bit longer. Imagine those 10 years and you're really not sure. How about in those 10 years, government is changing? For example, it depends on the countries. For our country, after the years, a party leader is into power. How about when I've just given them the money, then something happens, the president is leaving and everything. Am I really sure I'm going to get back my money?
Well, that's where we have the primary and the secondary market.
Yeah.
The primary market, you buy directly from government through the central bank. The secondary market, you can be able to sell that instrument to another person. That's why you don't have to wait for 10 years. That's the worry of most investors, and it's a petty worry. It's not something that applies. Primary market, we buy from government. Secondary market, I sell to anyone I want. So I can give my rights to earn an interest from a treasury bond to another person through the secondary market, where I can go on the exchange, I list my bond, and then someone else buys it. So there's nothing like you have to wait for all that time. But
then for the secondary one, the fact that I'm buying it from someone, it's kind of worrying or inquisitive. Why? Is there a better interest gain if I buy it from someone?
It's lower. Because who is taking more risk? The one who is actually buying from government, or the one who is buying from someone else?
The one who is getting from government.
Yes. So that one gets more interest.
Yes. So
and then the secondary market gets less interest. So if you want to buy with a high interest, go direct. But there are conditions. To go direct, you have two bidders. You have competitive and non-competitive bidders. The competitive bidders are the guys who have a say on the interest rate. And there you have to have 100 billion.
Okay.
Single.
You must have above 100 billion.
Above 100
as an individual.
Yes.
But Ugandans are really rich. They're really rich.
So that's why secondary market, it doesn't have all those limits. You can have 100,000, usually, okay, we start with 100,000 still on the secondary market. So it's 100,000 and units of 100,000. So there's nothing like 150,000. So it's either 100,000, 200, 300, like that. Okay? That's the dynamism of these treasury bonds. And the secondary market, that's why it has more activity, because that's where people can afford, first of all, and that's where people can actually get to access the market.
And realize the secondary market having a lesser money rate. Like, and I come give government money.
Exactly.
But then it's sad how you're going to get a lesser profit. But for the primary, though it's really risky, an individual having particular 100 billion to give it to the government of wow, that is a lot of money.
Exactly.
But you're really sure it's coming back to you.
It's going to come back. It's going to come back. Government will not default. It doesn't matter whether government changes. You talked about if government changes. Government is an entity. It's not a person. So whether the person goes, government remains government.
Yeah.
And Bank of Uganda is the one holding this money. It's not the government or the individuals. Okay. So you're sure Bank of Uganda will not default.
We've seen increases in this particular bonds. Is it because of our economic outlook? Or inflation and those big problems?
So when you talk about the rates and so on, well, inflation has come in very handy here. 10%, where we've been above 10%. It's been something that has actually held us back and has had interest go up. So the central bank rate affects the yields on the treasury bonds, and these are in tandem. So that's why we have sometimes fluctuating, yields, fluctuating interest rates, and so the market activity and the inflation and the Russia-Ukrainian war, all those things come and affect the rates. Okay, and that's a very long discussion that will probably take us another day,
another big episode.
Yes,
but it's really been a good time here.
Yes,
at Smart 24 TV, we are really recognizing women in this entire game. If you've been watching our first show, it had beautiful ladies around. This is their second show, and it's still having me on it. As the day goes on, you're going to have very many beautiful ladies working with you today. And for the financial markets, it is always on our television at exactly 10 to 11 a.m. It's with us, and we keep discussing these issues.
Thank you, Matha. I had a very wonderful time, and I hope we meet once again, and a very happy Women's Day.
Thank you.
Thank you so much, ladies and gentlemen. There you have it. That's it from us. Smart 24 TV is here to celebrate women today and forever, but today in a very, very special way. We want to wish all the women, especially women in business, a very wonderful Women's Day. Remember to check out Altex and the Ssebbaale initiative, and get to dial *292# to experience the magic there at Altex East Africa. Buying yourself treasury bonds in East Africa at the best interest rates. My name is Anthony Ssebbaale, and I have been with
Matha Nisiima.
Bye for now. See you tomorrow. Bye.